This is going to shock you. By choosing Bitcoin over Ethereum, MicroStrategy's Michael Saylor has missed out on a $10 billion profit. Oh, yeah. See, MicroStrategy's Bitcoin stack is worth around $15 billion at the time of recording this video, but had they bought Ethereum instead, it could now be worth around $19 billion. And that's not even counting any of the additional staking rewards that they could have had, which would be wildly significant at those kind of levels of Ethereum. Now, was he wrong for choosing Bitcoin? Controversial topic. Now, Michael Saylor loves to say that there's no second best, but in this video, I will set out the case for why Ethereum could in fact be the better investment compared to Bitcoin. I know, saved throwing the tomatoes at the screen for a few minutes. Let's just get into it. Let's have the experiment here, okay? And stick around to the end of the video where I'll be sharing the #1 challenge, of course, that Ethereum will need to overcome if it's actually going to, at some point, overtake Bitcoin as the primary crypto asset. So 2024 is turning out to be the year that crypto goes mainstream in a big, big way. And it's stock market ETFs, of course, that are driving adoption in a massive way. Lots of other stories too, but that's the big one right now. The newly approved Ethereum ETFs are the buy the news event. And here's why. First, we saw a bunch of physically backed Bitcoin ETFs get approved in the USA back in January. Then what happened? Well, BlackRock's Bitcoin ETF became the fastest ETF to hit $10 billion in assets in history. Now, fast forward just 4 months later, and these ETFs now hold over 850,000 Bitcoins worth around $60 billion. More than 900 different investment firms, banks, and institutions, retirement funds, pensions, stuff like that, they've bought in. Just in Q1 alone, all of which needed regulated access to get into Bitcoin. They wanted it. The demand for Bitcoin has been wild, and it's just starting. It's just starting. Bitcoin's price rallied 80% in anticipation that a Bitcoin ETF would get approved. And up until the first day of ETF trading on January 11th, we had a wild rally. After the brief sell the news blip, inflows topped $31 billion in around just 2 months, with Bitcoin rallying over 90%. Crazy stuff. Michael Saylor just a few weeks ago said that there will be no Ethereum ETFs. He was very, very wrong, obviously, on that, because lo and behold, only a few weeks after he said that, 8 physically backed Ethereum ETFs just got approved by the SEC. Now, it was very last minute, and indications were that this was not going to happen, but then it did. Politics changed very quickly. Now, Ethereum levels the playing field with its own ETF. So if the Ethereum ETFs can capture even just a small percentage of those Bitcoin inflows, then ETH price should follow Bitcoin's movements and probably moon pretty gosh darn hard. The spot Bitcoin ETFs, they were enough to push Bitcoin's price to a new all-time high. So with Ethereum still way below its all-time high price of $4,878, it still seems a bit undervalued by comparison. With Bitcoin having rallied pretty hard, Ethereum is now playing catch-up, and these ETFs may be here much sooner than expected. You see, BlackRock has already amended its S-1 registration statement, which could mean that we see a go live date in June, possibly this week, possibly even by the time you're watching this video. Things can move real fast at this point. Now, according to Bloomberg analyst Eric Balkunis, that's when we could see it, okay? So look, there's an opportunity right now to front run the spot ETFs, and there's every chance that it's not going to be the old buy the news, sell the rumor event sort of thing, okay? But instead, a buy the rumor, buy the news event. There might be a short sell-off post listing, but look what happened with Bitcoin. Now, before I talk about Ethereum's advantages over Bitcoin, let me interrupt the flow real quick to let you know the best damn newsletter in the cryptocurrency game. That's my newsletter. It's called Wealth Mastery. It's absolutely awesome. Our readers love it, and I'm sure you will too. See, every week we bring you the latest and the greatest and the best insights in the market for free to your inbox. We're talking about all kinds of stuff: airdrops, altcoin news, deep dives, NFTs, technical analysis, charts, and much, much more. I know how it is. You're busy. Wife, kids, dogs, all that kind of stuff, but you want to stay up to date with what's going on in crypto? This is for you. You can join our 125,000 plus weekly readers and sign up for free using the link down below in the description or in the pinned comment over on X. Thank you very much. So Ethereum has a couple of features that Bitcoin, of course, wishes that it had. And this really changes everything in the equation here. See, unlike Bitcoin, Ethereum has already been a deflationary currency. Ethereum first turned deflationary after the merge upgrade happened back in September 2022. Over 419,713 Ethereum have been burned at the time that we recorded this video and permanently removed from circulation since the merge happened. Whilst Ethereum's supply has temporarily turned a little bit inflationary since the Den Kun upgrade to help reduce gas fees for layer 2 Ethereums like Arbitrum and Base and stuff like that. The Ethereum ETFs, though, could now act as a deflationary force to get Ethereum back on track, because the more network usage, the more fees that get burned. Now, in the long term, this powerful deflationary trend will have a massive impact on the price of Ethereum. And then, of course, there's the fact that Ethereum has native yield that also massively sets it apart from Bitcoin. And Wall Street institutions know that if they can get their hands on that Ethereum, then they stand to make a ton of cash. Think about all the management fees. BlackRock's Larry Fink has said the use case for Ethereum is all about tokenization. Billionaire investor Stanley Druckenmiller has said ETH might eventually dominate BTC. Big words, Stanley. And JP Morgan's Jamie Dimon has said ETH has use cases. Jamie Dimon, that guy, I tell you. Anyway, he hates Bitcoin, but he is an Ethereum fan. Make of that what you will, I guess. Anyway, BlackRock now has $20 billion of the Bitcoins and assets under management and a 0.3% fee. Now that is generating a lot of revenue for them every single year. And that's without any revenue from staking like you'd have with Ethereum. This is a potential gold mine for them. So it's in their best interest, and the best interest of all ETF issuers like BlackRock or Fidelity, to embrace these ETFs and to push them as hard and fast as they can. You can almost feel the desperation from these institutions to find the biggest yields in the market. And here's a funny one for you, for all the Americans out there. Hong Kong's Bitcoin Ethereum ETFs started trading in April, and they're really yet to see demand take off. However, Hong Kong's going to introduce staking yields, which don't actually come in the US ETFs right now. Anyway, these ETF issuers are currently exploring the ability to stake ETH tokens in exchange for yield as a way to try to boost demand over in Hong Kong. I'm sure we'll get that done. Might take much longer for the American ones to get that, but at some point it'll come. But think about this. What if the American ETFs were allowed to stake your ETH, but you just don't get the rewards? They could keep it all. They'd make so much money. They make so much money, it's ridiculous. But anyway, it's only a matter of time before staking gets slipped into the fine print of these ETFs in the USA. The US ETF issuers have also tried to get staking included, of course, as mentioned, but they failed to do so far. In fact, getting staking taken out was what helped get the ETFs across the line. But it does prove that Wall Street does have an interest specifically in Ethereum for its yield, so I'm sure they're not going to give up. I'm sure they'll eventually get it. It's only a matter of time, especially now that crypto has become an election issue. It won't take long before institutions start dumping probably everything. Their bonds, for example, in favor of staking Ethereum. That nice 3.5–4% staking yield looks pretty good, especially when bonds dump back down to like 1% yield. While Bitcoin's primary aim, of course, is to become a neutral global currency, Ethereum's primary purpose is to become the platform that tokenizes everything, with Ethereum powering every transaction. And users go where developers are building. So it's absolutely no surprise to see that Ethereum's ecosystem has been booming and has hit new heights in 2024. Don't bet against Ethereum. That's been a losing bet since the inception of Ethereum. Ethereum has almost seen near vertical growth in wallets and transactions, of course, driven a lot by what's happening in the layer 2 scene. Things like Base, Arbitrum, Optimism, and the other 100 layer 2s that are coming have been driving a lot of demand. Weekly active wallets hit a new record of 10 million on April 8th, and weekly transactions reached an all-time high of 60 million across Ethereum's 6 main layer 2 networks. The improved technicals, such as lower gas fees for those layer 2s, that was what the Den Kun upgrade is all about, wallet abstraction, meme coin mania, which we're seeing happening on Base and stuff like that, is giving people a low barrier to entry into the Ethereum ecosystem to be able to experiment and to interact with Web3. And everything that happens on layer 2 requires Ethereum for gas fees. And if Larry Fink has his way, and Larry gets his way, doesn't he? Then he's going to tokenize everything, starting with financial assets, of course. And where's he going to do it? Probably on Ethereum, which is why BlackRock and Ondo Finance are leading the real world asset sector together right now. Ondo Finance has 2 flagship products. The first is its USDY stablecoin, which is designed for retail investors. That's actually backed up by short-term US treasuries and bank demand deposits. And the second is OUSG token. This is a short-term US Treasury bills ETF. It's the OSUG token that's actually connected to BlackRock's BIDL tokenized fund, BUIDL tokenized fund, which already has a market cap around $500 million. And it's Ondo Finance that has sent the RWA sector skyrocketing in May to become the best performing sector in the entire crypto ecosystem after meme coins, of course, because meme coins, man. Anyway, investors are obviously bullish on the real world asset sector because they know exactly what the Ethereum ETFs unlock. They know exactly the liquidity is going to come in. They know what's coming. They see where BlackRock's taking all this. Larry Fink says that ETFs are the stepping stone to tokenization. ARK Invest estimates that on-chain financial assets could scale by a yearly rate of 32% to be worth $5.2 trillion by 2030. Those are phenomenal numbers. Massive liquidity coming into the crypto space. Huge, huge, huge. Ethereum's apps and ecosystem will bring endless utility, which in turn brings investment in developers, resulting in more users. Again, everything bringing value accrual back to ETH. ETH could be more popular than Bitcoin because of its inflationary supply, which means it's scarcer. It's a native yield, which Wall Street loves. It requires 0.01% of the energy to run, which makes it appealing to those who have that ESG mindset perspective, however flawed that may be. And ETH, of course, has a ton of apps, huge ecosystem, but it will only overtake Bitcoin as long as it can overcome the challenge of convincing all the boomers out there to move their 60-40 portfolios into ETH and not Bitcoin. And in reality, they're probably going to move it into both, probably. Look, Bitcoin's digital gold. Ethereum, it might need a better elevator pitch. Digital oil, maybe. Digital everything, maybe. But if it's going to get those boomers with their bonds to part with their money, we'll need to have something good to convince them. Let me know in the comments whether you think that Ethereum will outperform Bitcoin, and I'll see you in the next video. Thanks for watching.